Hello, a very good day to you. Welcome to another episode of Equiforex Academy. So in today's class, I'm going to be showing you how you can trade the forex market strategically, even if you have limited knowledge about the market. Okay, so the number one rule for this trading strategy is you trade from the London section to the ending of New York section market. That's the duration is a daily trading strategy, though you can use it for any kind of trading style, be it swing trading, intraday trading. But currently, this one is just for daily trading. Um, it's for day traders. So what you do, you just come to the daily time frame. You come to the daily time frame, okay? Then the next thing you do is to look out for the initial closed of the market. That's the last candle that was closed. That is, you look out for the last candle, that's yesterday candles. As you can see, is this one here with this long wick. Okay, so that's um the last candlestick that closed. So after upon checking it out, it's okay, it closed bullish. Is it bullish or bearish? After we spot that, you need to know the trend of the market. The trend of the market, this will help you to know the trend of the market. One, you go to your indicators, click this F, it will take you to your indicators. You click on moving average, click a plus sign. You see series of indicators here, click moving average. Then you see parameters here. The last moving average that I said was 20. You make yours 30. Okay, upon making 30, this method, make sure this method is at exponential. This method here, okay, make sure it's at exponential. Then is close. Here is applied to close. Is close. Then this 4 pixel, it depends on, that's to tell you how thick you want it to be. Make it at 4. Then color, this one is for color. This one is color. You can choose it to whatever color you want it to be. I can make my own yellow. Then click done. You go back. You see this is the yellow. Okay, that I just set now. Now what you do is make sure, first thing I said, London market session, please take note. You come to the daily time frame, you know the last candlestick that closed, that is yesterday candlestick, is it closing bullish or bearish? Then lastly, you know the trend. Upon knowing the trend simply means this moving average is what's going to help you to think that it is the candlestick above it or below it. But since we are day traders, let's not use the daily time frame for it. So we'll go to the H4. Okay, upon checking the H4, if the excuse me, if the candlestick is above, that is if price is above this moving average, you should be looking out for a buy. That's if the daily time frame closed bullish. If it's closing bullish, fine, you come here, you look for a bullish candlestick too. Did it close bullish? If it closed bullish, that's a nice one. It's not telling you to buy, but we need to confirm very well. We come back to the H1. For instance, this is 3 p.m. and the market is giving us a signal to buy. For this is a perfect example of what I'm talking about. Okay, you check out the daily time frame, is bullish. Then we move on to the H4, is bullish. You can see it just closed bullish. They will move to the H1. What's happening here is still bullish. Okay, as you can see, it's still very bullish. Now our entry point is 30 minutes time frame. Okay, this moving average is what will help you to filter the unnecessary noises. As you can see, it's above the market, it's above the moving average, okay, that I just told you to set. What you do is you just enter the market, simple and short. Instant market execution, you buy. Okay, let me buy. Let me use this as a vivid example. I'll buy, then I'll set my stop loss below the moving average. That's below this swing, here, below this swing. Okay, this way I'll set my moving average. The market is going up, so I set my stop loss below this swing, this higher low that has been created here. So how will I set my stop loss? I'll bring on this cursor here. I'll just click on it, then I'll drag it down to the level I want to place my stop loss. This is 1.26798. Okay, let me just give it that 1.26800. Now let me go and set my stop loss. I come here, I drag to my right, sorry, to my left, then I'll click this pencil like icon there. Once I click it, it will take me to where I'll edit my stop loss. 26,800. That's it. Okay, you can see my stop loss is set and my take profit. I still bring in my cursor here. I'll look for the nearest resistance. Remember I told you about support and resistance. I look for the nearest resistance here. Okay, and make sure your resistance, your take profit is bigger than your stop loss. It must be bigger than your stop loss. Now what is my take profit? 1.26400. Let me just leave it at 420. Okay, so 1.27, sorry, 420. Can you see it? This is my stop loss, sorry, this is my take profit, and here is my stop loss. Simple and short. You've successfully entered this market and we're expecting it to run. Okay, so that is that for a buy on how to take a buy position at ease. Rule number one, London market session, check the position of the daily candlestick. If it's going bullish or bearish, come back to the H4. Is it in line with the daily time frame? Come back to the H1 and then the 30 minutes time frame. And mind you, if you are going for a buy, the market price has to be above the moving average. And now let's talk about a sell. Let's go look for a market that is selling. Yeah, there's a perfect example. So the initial candlestick yesterday was this. Okay, and it was bearish. Let's assume we woke up in the morning and we entered this market. We saw this market in the morning when it was at this level. It was a good point for us to enter. But that aside, this market is bearish. What you do next, you go to the daily time, the H4. Okay, what does the H4 say? I guess in the morning it will have been this in bearish beside this bullish candlestick, like this bearish one now. Okay, now moving on to the H1. But mind you, you see the trend is bearish. Okay, like what I said initially, London trading section, the daily time frame must be in line with the H4, the 4-hour time frame, the 1 hour time frame, then moving on to the 30 minutes time frame. I can see everything is below the moving average. That's a confirmation of the trend. That's why I gave you the idea of the moving average in order to filter the unnecessary noises for you. Okay, now this market is too low for you to enter. Pullback is imminent. Okay, I'm just using this as a case study to illustrate what a sell market look like. If you are to sell this market, you should be selling this market from around this region. Okay, then your stop loss will be here. You should be selling this market below around this region, then your stop loss will be here. Then your take profit will be around this region. You can see this market has really done well. Okay, mind you, I'm repeating this for emphasis. The daily time frame must be bearish. If it's a bearish market, it must be bearish. The H4 must be bearish. The H1 must be bearish. Then you come to the 30 minutes time frame, it must be bearish. The candlestick must be bearish and below the moving average before you enter. Then you set your stop loss above the moving average if it's a sell. Okay, then you put your take profit in the nearest resistance. If these rules are not met, don't trade it. If these are not in line, if it's not in the morning, that's the beginning of London session, the daily time frame is not in line with the H4. Maybe the daily time frame is telling you bullish, while the 4 hour time frame is telling you bearish. Just leave the market alone. The H4 must be, the daily time frame must be in line with the H4 and the H1, then the 30 minutes time frame that you use in entering. Okay, so please be extremely conscious of this rule and make sure your take profit is bigger than your stop loss. And lastly, don't take more than one position for a trading pair. For instance, as you can see my trade running now, each trade has its own instrument. Like I'm not entering many positions for one trading instrument. Okay, so manage your trade effectively and you'll be good. So I hope this has given you a very strong insight on how to trade on your own, and make sure you practice. And if you need an extra assistance, please do where to hit me up as soon as possible. Thank you very much for your time. I hope to hear from you again. Thank you.